show those ones, not show these ones. I was like, that's kind of smart. No, that makes sense.
Okay, this is closing lesson 4. My name is Jim McCloskey, and let's go to closing 4. Closing 4, and go to the second page where we have the fact sheet, or the bubbles, or the box on closing 4. Page 152 is my page. And, everybody there, guys? And we start with the new loan amount. What do we do with that? This is the only line we need to know. Line 3. Line 3 credit buyer for $142,000. Line 3 credit buyer for $142,000. Then we have the payoff of the existing loan. Who's responsible for this?
The seller.
The seller on line 5, single entry debit seller, $86,432.03. Then, the loan service fee, loan origination fee, whatever they want to call it. And this goes on line 27. Debit buyer for $710. That's the origination fee. Lender discount, lender doc preparation. Put it between line 21 and 22. Write it in there. This is the doc fee, lender doc fee. Write it in, and debit buyer for that $175. Let's talk about this, guys. This used to happen often. It doesn't happen nearly as much anymore, but what was happening, and as I say, it still does happen, where, let's say somebody pays, let's say $500 for an appraisal. And on the closing sheet, it shows he paid $700. Let's say he paid $350 for an inspection. And it shows on the closing sheet that instead of $350, it says $450. And I see this on the closing statement. I look over at the buyers. They know what they paid for these. I'll say, what'd you pay for your appraisal? They'll say $500. I'll say, it says here you paid $700. What'd you pay for your inspection? Still $350. It says here you paid $450. What these mortgage brokers do is they pad those. It's an add-on charge. And it's totally against the law. You cannot do that. What the lenders call it is fluff. We call it theft. And what happened, and what I'll do is I'll look at the closing lady and I'll say, would you go back and change those figures? And hopefully that lender is sitting right there. Oddly enough, guys, maybe one deal out of 4, the lender's going to be there. Crazy, crazy. Anyway, hopefully that lender's sitting there, and what I'll do, I'll say, change those figures, get them to where they're right, and then pass those out. And by the way, and the lender will go, well, that's our cost of doing business. You can't mess with that. And I'll say, and I need a copy of this one the way it is, so I can turn it into the Attorney General's office for criminal prosecution. And that shuts that lender up real quick. And they will go after that lender. He or she will lose their license, and they will be out of this business. Let's get these crooks out of here. I don't like, squealing, whatever you want to call it, but that's theft. They're going to come in here. If they walked into a 7-Eleven or a liquor store and stole it, they'd be in jail. They think they can walk into my closing and rip my people off and get away with it, or rip your people off? Look for this, guys, and if you see it, I hope you have the guts to stick your heels in and say, this is not going to happen. Now, we have other fees, like this one here, loan documentation, loan prep. That's what we call a garbage fee. They're charging us a loan origination fee, and then now they're hitting with a garbage fee too. And I don't bother with those. Those you just kind of have to live with. Now, if this is my deal, I'm going to tell them get rid of that lender doc fee. I'm not paying this garbage fee. And they might have a bunch of different garbage fees on there. What I'm talking about is against the law is when they pad fees, when they fluff them up. But, and I don't know how hard you want to dig your heels on it. If it's your own deal, and they'll have things like lender doc preparation, title inspection, something like that. Bull. That's, every attorney looks over their title. That's part of their fee. They want to charge me an extra fee for looking at the title? I'm just saying these are examples of garbage fees. Those aren't against the law. They're just kind of bad business.
Who identify the fluff?
Who would identify it?
How do you identify it?
How do I do it? Because I know, I'm working with the buyer, okay? I know what that buyer paid for that appraisal. I know what we paid for that inspection. Who orders the inspection? The buyer's broker does. Who orders the appraisal? The lender. The lender orders the appraisal. But they order it pretty much through me as the broker, letting me know when to meet them there and everything else. So I know what they're paying for that appraisal. I know what they're paying for that inspection, for the survey, for all these things. And if they start padding these, hope you guys have enough guts to dig in your heels and get these crooks out of this business. You know, if you're a crook, don't get into real estate. Go drive a truck somewhere. Don't become a real estate broker. You're interfering with too many people's lives.
Jim, have you ever gotten someone in that and you turned it into the Attorney General and they lost the license?
Oh, yeah. Oh, yeah. They get a felony against them, too. This is serious, serious stuff, and this is slam dunk. I mean, that's plain flat fraud right there. Fraud and theft.
Have you ever done that? Like, has someone ever, like, crossed you wrongly and you got him to lose his license?
Oh, yeah. Oh, I've done it more than once. Oh, heck yes. You better believe it. In fact, it's funny. I get closing ladies in class, you know, taking their license. And they'll say, yeah, we heard about this one guy out there who turns these people, is that you? Maybe so, I don't know.
Should our employing broker be like looking out for that?
Your employing broker probably doesn't even know anything about it. There's a good chance. I don't know, all depends what level he's at as far as experience goes. There's all different kinds of experience out there, guys. I've been involved in over 300,000 closings. It's not exaggeration. Pretty incredible. So, not that, and every one I do, every closing you do, you still learn something. That's how varied this business is. That's what makes it interesting. Okay. So, loan doc fee. Then we have the owner's title insurance on line 7. 1326 debit seller. 1326, and right below it, mortgage ease title policy, debit buyer. On 7. And that's a single entries. Debit seller, 1326, debit buyer, 75. Single entries. Should we try it again? Why does the mortgage E need a title policy?
Oh, yeah.
You're too much.
It's important.
It's important, yeah. Because they're what?
Because they're going to resell the loan to second market.
There we go. Bingo. Give him a hand, guys. There we go.
Only 6 weeks into it.
6 weeks into it, yeah. Anyway, yes, remember, they're going to sell it to the secondary market, and secondary market isn't going to buy it unless it's in first position. So that's called the mortgage ease policy. On the state exam, they're going to say who pays for the mortgage ease policy, and the answer is buyer. The correct question should be who typically pays for it, because anybody can pay for anything. There's only one thing in our industry that's not negotiable. Who's had Colorado? You should know this. What's the one thing in our industry that isn't negotiable?
Mediation.
Very good. Who said that? Good. The cost of mediation. The cost of mediation is split at 50-50. It's non-negotiable. Okay. Then we have the lender's attorney review the title insurance. Here's another garbage fee, a rip-off fee. They want $75 to review the title? Are you just kidding? You kidding me? We just paid, look at that, we paid over $1,400 for title. Now you're gonna rip us off for $75 to review that title? They're not gonna let that title get out of that office without somebody reviewing it. That's a garbage fee. And it's up to you whether you want to dig in your heels and say, get rid of that thing. That's on line 10. And that's debit buyer for that. And then we have recording the deed, recording the warranty deed. Doesn't have to be a warranty deed. And that's on line 11 for $6. Debit buyer, single entry.
Goodness.
Then the trust deed on line 12, debit buyer, $26 for the trust deed. You gonna be able to explain to your people the difference between a deed and a deed of trust? Who wants to give it a shot? I'm your client. What are they, aren't those both the same thing?
So deed of trust is when property is transferred to Colorado.
No.
Property security of the deed.
Say it again, Kathy, I think you nailed it.
The property security for the deed.
So,
Well,
The deed is what transfers the property, and the deed of trust is the security on the debt.
exactly right. The deed transfers the property. The deed of trust is the property as security for the debt. Remember, in other states, they have mortgages. We're a deed of trust state. And the mortgage is not the money. The mortgage is the property. If you were to ask 1,000 attorneys, 990 of them would tell you that, well, of course. You know, of course the mortgage is the money. No, it isn't. The mortgage is the property. And nobody has a mortgage. They gave it to the lender, the property to the lender as security for the debt. So when you're in a meeting or you're in a social gathering, we talk about this, guys. You know how you make your living in this business? Going to parties. Tough old life, I'll tell you. I go to all these networking meetings. Once you get rocking and rolling in this business, guys, it's a lot of fun. Like I say, you go every place you go. You know, then pretty soon people recognize you. You're their go-to person. One of my favorite ones to go to is the Hispanic Chamber. Less than 50% are Hispanic. And they have a meeting the last Thursday of every month, a big networking meeting. Usually a very nice place, and somebody sponsors it. You get free food, free drinks, with very few exceptions. I'm the only broker there. They don't come up to me and say, "Are you a broker?" They say, "Are you the broker?" Isn't that some 250 people there, and I'm the only broker in the room. And you'll get in situations like this. And what you want to do is join the Better Business Bureau and ask them what meetings you should be going to. They'll tell you. They know. I'm giving you a lot of secrets here, guys. Use it. Use it. Make this business work for you. And these things are free. It costs you your gas to get there. That's it. What's that?
¿Se hablo español? No.
No. And again, how much do you need to know? It's whatever you use whatever you have out there. We're going to talk about this in a few more days when we talk about law and practice. But things like I got to get a fancy car. You don't need a fancy car. Use what you have, and have the people just follow you to look at houses. You don't need a fancy car. How about clothes? You don't need fancy clothes. Go over to Goodwill, right over here, right across the street by Walmart over here. That Goodwill store is killer. There's a ton of clothes in there still have the tags on them. You get a heck of a wardrobe for $100. That's no exaggeration. And the women too. The women too. And the way I do it, I look at myself, I want to be the best dressed person in the room, whatever that means. Yeah, Josh?
It was kind of related to that question of like, what level between business casual, and business professional, like where do you generally fall on that?
Again, you're going to have your own feel for it. Something as simple as a tie gives you instant credibility. A tie will make you the best dressed person in the room in most cases, especially this time of year. So simple things. You don't have to spend a ton of money to make it in this business and to look really good out there. So, anyway, let's keep going. So we're going to be recording the warranty deed, recording the deed of trust on line 12 for $26, and there's that release. Who pays for that? The seller pays for the release on line 13, $14, debit seller. The tax certificate. What does a tax certificate do? It shows us the
Tax.
Shows us kind of like the nature of the taxes, like if it's a special tax.
not the nature, Josh. You're close. Help them out.
The taxes were paid last year?
It shows us the, what's that word?
The state of Texas.
Condition. The condition. Remember that, guys. The condition of the taxes. You know, not only what are they and were they paid last year, but is there a special taxing district? Who can tell me about a special taxing district? What's that?
Sewer.
Boulder's special taxing district?
Isn't that what you said?
No.
That was the one that had the sewer problem.
Yeah.
Oh.
Northglenn. Like Northglenn's a perfect example. When they built Northglenn, it became a city. The sewer and water went out, and they had to not only repair it, but they had to buy their water from Westminster and Thornton. And it wasn't unusual for your water bill to be higher than your house payment. That's a special taxing district. And this tax certificate will show us if it's in a special taxing district. There's many subdivisions, especially in Weld County and Douglas County, where they're on a central well, and that well's going dry. And there's some real serious issues that they're facing down there. So a tax certificate shows the condition of the taxes. Then the good old documentary fee, $17.75 on line 15, debit buyer. Debit buyer. That's for the documentary fee on line 15. Any questions on that documentary fee? $291,000 house. How do I figure the doc fee?
4 decimals in.
I go over 4 decimals. 1, 2, 3, 4. $29.10. Don't miss this one, guys. You'll have one on the state exam. Don't miss that one. Miss the tough ones, not those. And then we have the appraisal fee on line 31, $350. Who pays for the appraisal? It's negotiable, but typically who pays for it? The buyer. Whose advantage is it to get an appraisal? The buyer. And there's that ILC again. What's that stand for? Oh, what now? Improvement Location Certificate. A certificate showing us the location of the improvements. That's what an ILC is. What else does ILC stand for? The ILC, no, ILC, installment land contract. Installment land contract. What's some other words for installment land contracts? Land contracts, installment land contracts. It's not just for land, it's just called that. A land contract, installment land contract, owner will carry, contract for deed, all mean the same thing. But ILC stands for 2 different things: Improvement Location Certificate and Installment Land Contract. The credit, and we add those together, the ILC and the credit report together, 75 and 105 on line 30. And that's again going to be debit buyer, credit broker. Any questions on any of these, guys? If you're not sure what they are, we can talk about them.
I think I wrote something in the wrong place.
What you got?
So the 1750 was the dock fee, right? Number 15, debit buyer.
1750 was the dock fee. That's on line 15.
Correct. So where was the 175 lender doc prep? What line was that?
Oh, the 175 for the
Yeah.
document prep, between line 21 and 22. Just write it in there, document prep. Yeah.
So, the ILC is basically like a survey then? Is that why we add the two together?
It's surveyors do them,
Oh.
okay? And why do we order them? Because the lender's going to order one. There isn't one deal out of 40 where we're going to even have an ILC or a survey. But the people build a garage. Well, they're going to order an ILC, make sure there's no encroachments.
Okay,
Is
so
what
making
they'll
sure
do.
like all the zoning stuff is proper and all that.
Yeah, the setbacks are what they should be, et cetera, because they built this garage, and they will order, again, not a survey, but an ILC, to see if there's any encroachments. That's the main purpose of an ILC, is to see if there's any encroachments. Okay. Tax reserves. 5 months of tax reserves on line 19, 665.15. This is what the lender is requiring the buyer to put into a reserve account. For your tax reserves. We're going to talk about that later. We're going to find out that the maximum they'll ever do is 3 months. But for right now, we'll let them say 5 months is fine. And premium for new hazard insurance, this is for the entire year on line 23. 23, $607, debit buyer. And then we have interest on the new loan, the prepaid interest on the new loan. Let's put that on line 29. Oh, we got the reserve, I'm sorry. Let's get the hazard insurance reserve first. And that's on line 24, $101.16, debit buyer. Who's it? So why does the lender do this? Why does the lender make the borrower have an escrow account for his taxes, an escrow account for the insurance, an escrow account for the HOA, escrow account for his PMI? Why does the lender do that? Is it to protect the borrower? Protect the lender. Protect the lender. If the people get behind on those payments, there's money in there to pay on. Then, the interest on the new loan, we talked about that on line 29. This is the prepaid interest. Debit buyer, $789.75. And then it comes out to $91,564.84. Then we have the net loan proceeds. We write that on line 38. Just write it there. Net loan proceeds, and what do we do with that?
Debit broker.
Debit broker, single entry. You're going to have that on the state exam. Don't miss it. Okay, previous page. Now we're back on the fact sheet. Fourth paragraph. Everybody there? The sales price, $177,500 with an earnest money deposit of $5,000 and set to close December 4th. Let's just get that part down. Upper left-hand corner, date of proration, 12/4, December 4th, 12/4. Line 1, we have the sales price, $177,500. That's a credit seller,
Debit buyer.
debit buyer. If you're not sure why these are debits and credits, guys, let's talk about them, okay? Don't ever think that there's no such thing as a stupid question. The only stupid question is one that hasn't been asked.
So
Yeah.
credits when you receive money and debits when you have to pay it?
Isn't that perfect?
Is that perfect?
Remember I said your boss gives you a check, that's a money coming to you, that's a credit. You write a bill, that's a debit, money going away from you. Credits are good, debits are bad. One way to look at it.
Say it one more time.
Credits, okay, you're my boss, you give me a check, that's a credit, that's money coming to me. Then I write out a bill and send it out, that's a debit, money going away from me. Credits and debits and credits.
With that being the case, I still am a little unclear on why the earnest money deposit is a credit to the buyer. Because aren't they technically paying that to say, like, so it's down on the property?
You want to try it?
Yeah, okay, I had this exact question, Josh. So, at the beginning, when he gives the earnest money to the lender, so the lender has it and whatnot, but at the closing, the lender is who has that earnest money, and he debits it back to the buyer. And so he gets that $5,000 back. And so that's why he's credited the $5,000. And the broker had it beforehand, but then he gave it away, so that's how he debited it.
So it's essentially like, could you consider it almost like collateral? Like a way to like ensure your...
You can look at it as collateral, yeah. I sold you a house, and you gave me a check, $5,000 check, and again, I'm the employing broker, so I'm going to take that copy of that check and the contract, I'm going to give it to the listing broker, and once that contract's approved, then that listing broker will put that earnest money into an earnest money account. Within what time frame? From? Notification of acceptance. Yes, okay. Including Saturdays, that's right. That's right. And so you get that, Josh? And so we have to debit that broker to get the money away from him, don't we? So we're going to debit that broker, and where's that money go? Credit the buyer. Debit the broker and credit the buyer. That's why that earnest money is a debit broker credit buyer.
That makes sense.
Okay. I can say it again real easy. Everybody okay on that? Yeah,
What
Lonnie?
is the notification that you have to receive?
Oh, that's a real good question. So what is this notification? Okay, let's work on this. I'm the buyer's broker. You're the seller's broker, okay? And so what happens is you call me up and you say, hey, the seller just accepted your contract on the Joneses. Well, at that point, because you told me, it could be considered what's called imputed knowledge, that my buyers know that the seller accepted it even though they haven't heard it yet. But by you telling me, especially if I'm their agent, as opposed to transaction broker, it could possibly stand up in court that that's when the notification happened, when you told me. That's called imputed knowledge. My buyers are responsible for knowing about that acceptance even though they haven't heard about it yet. But in reality, when does it definitively happen? Is when I pick up the phone and I say, hey guys, your contract was accepted. That's when we have definitive proof of that acceptance. So, all right, where are we at here? We got the deposit on line 2 for $5,000. That's credit buyer, debit broker, and a squiggly line all the way down to the net loan proceeds. The buyers who to apply for and obtain a new conventional loan, the amount of, when we got all that taken care of, for 30 years. The sellers agree to carry back a second deed of trust in the amount of $10,000 at 9.25% interest per annum for 5 years. Let's put that on line 4. We're going to debit the seller and credit the buyer for $10,000. Then we're going to do the prepaid interest for the month of closing. We have to take the interest from today till the end of the month. If we don't get it today, we're not going to get it. And so let's build our timeline. $10,000 at 9.25%. How much interest is that a year?
How would that hurt 25?
$925. Everybody got that? $10,000, 9.25% interest. We're closing on 12/4. There's your timeline. Go for it. Everybody see where I got the 925? Who doesn't?
You going in arrears or payments?
Okay.
Our taxes are always paid in arrears with one exception. The prepaid interest for the month of closing. That's the only time the interest is paid in advance, is for the month of closing.
How do we know it's prepaid? I don't see the information.
You don't know it's prepaid. You don't know. There's nothing there that tells you that. You've got to know how to handle this. This is what is the only interest that we have on the loan for the month of closing. The only interest we have on a new loan is the interest from the day of closing to the end of the month. That's the only interest we have. The prepaid interest for the month of closing. Is this prepaid interest paid in arrears or advance?
Pays in advance.
By its own definition, it's in advance, it's prepaid, right? So what side you gonna be on? Right side.
Where does it say prepaid?
Where's it? I just heard Garrett say, where does it say prepaid? How do we know this is prepaid interest? Because we know the first payment is going to be February 1st. What month does that February 1st payment cover? January. There's no January 1st payment to cover December. That's why we know we have to pick up this prepaid interest today. If we don't know when that first payment's going to be made, then we can't do the prorations. So lay it on me. So who's lost? Should we do it? Let's try it, guys. Let's do this one together here. Okay, so we're on this side. Let's get the good old platform going. What goes down here?
925. Oh, on the very bottom.
The very bottom. How many days are we looking at here? What's our total number of days?
30.
Is this interest for a month or for a year?
Year.
So what goes down here? 365. Good. 365. And then we have 925. 4 from 31. 27 plus 1. There's our formula.
So rather than trying to figure out the monthly payments out of the 925,
We don't need the monthly payment out of it. We don't divide by 12. That's only on an assumed loan, not on a new loan. This is the interest per year. And what'd you get? What's that?
70.96.
$70.96.
That's what I got.
basically.
$70.96. Let's put that on line 6. Line 6, we're going to debit the seller and credit the buyer. Because this is the seller's money, isn't it? He gets the interest on it. So we're going to credit the seller, debit the buyer for $70.96. This is the prepaid interest for the month of closing.
You said debit the seller?
I don't know, I have to look at my timeline, I'm nervous. I'm in a state exam. I'm going to credit who?
Seller.
Seller. Yeah, the timeline could be, yeah, use this timeline, guys. It turns these into no-brainers. Get these timelines really etched in your mind what they're doing. Now, well, that was so much fun, let's change it. It's always gonna be in advance because it's prepaid. But let's make it through the day of closing and a banker's year. Go for it. Go for it.
You don't have it.
Advance, through, and bankers.
So then, would you only add day if you're on this right side and it's 2 closing? Okay.
Lay it on me.
$69.38.
$69.38. Get your own. Don't trust them.
6681.
$66.81.
69.38.
Okay, a couple of you got that.
6938.
So I'm sensing a pattern.
I am too,
I think
maybe,
there's a
yes.
consensus.
Because it's through, not through,
I need some more.
I got, yeah, 69.30.
Seems to be the consensus. Shall we do it?
Yeah.
Should we do it? Let's get our platform. How many days? 360. 360, banker's year, 925. We're on this side, of course. 4 from 30, 26. Do we add one?
No.
No, we don't, because we're on the right side, it's through. Everybody see why?
We saw a pattern, but we're still wrong.
26.
6681.
What is it now?
6681.
So that, who got that?
Ooh, that was me.
Hey, Josh, all right, man.
Surprised himself.
Everybody see what happened here? Why you're all wrong here? And yes, you're gonna have these on the state exam, guys, but, if you're off a couple dollars, they're gonna have that answer there.
Why did the date change from like 12:31 to 12:30?
Because how many days are in a month in a banker's year?
Oh, God.
30. Every month has 30. Every month has 30. Okay, let's keep rocking here, guys. Let's say, please collect $21 to record this new second deed of trust on line 14. Let's line 14. We're going to debit the buyer, credit the broker on line 14.
online.
14, we're recording the deed of trust. If we don't record the deed of trust, it's a free house. It essentially can't be foreclosed on without that deed of trust being recorded. And that's $21. Then, the sellers paid last year's taxes in the amount of $1596.40, so on line 17, we just note that. Line 18, we prorate it. Go for it, you're on your own. $1596.40. The taxes. This is good practice for figuring out your days. Don't go from the 4th to the end of the month and subtract it, guys. It's going to mess you up. You don't know if you should have subtracted a day or not before you do. So do it the long way. Do it from January 1st to December 4th of the same year. That's good practice for you too, to figure out the number of days. I should be getting bombarded.
1478.31.
One more time?
1478.31.
1478.31.
1473.
1473. 94. Who else? I should be getting some from every one of you at this point, guys. You should be nailing this. You should be getting this down.
I got 113.35.
113.35.
I don't know why I got that.
Okay, a few of you got that?
If you got 113?
No, nobody got that.
Oh, okay.
But it's okay, you might be right.
I meant 1478. So you're probably
1478?
right.
Oh, shit. So,
1473.
I counted the days to
Okay, several of you got that.
How many days did you count?
It's 3 days because the buyer owns the day of the closing.
Okay, so that's what it's.
Yeah, so it's
January
337. Yeah.
So you can mess up.
Who needs a minute?
It's the 73.94.
Because you're gonna mess up.
Okay. Let's do it. Let's do our platform, 365. And then, of course, we have our tax amount, which is what? That's 1596.40.
That's where I'm messing up.
Then times the number of days, we get 337 days. 337 days. Anybody struggle with that?
Yes, I did.
Did you?
The easiest way to do that, to actually get to that number, is you can take, since it's only 1 month, rather than adding up all the other months, what I just did is I just took 31 out of 4 and then subtracted the day.
Everybody said don't do that, because you don't know if you should have added a day or subtracted a day.
It works for December.
Don't shortcut it, guys. Do it the long way. Make sure you get it right. Plus, it's great practice for counting the days, too.
Yeah, that's what I
Okay.
screwed up.
1473.94.
1473.94 on line 18. Again, that's debit seller, credit buyer for that. Then, it says, please collect and pay the seller's attorney's fees in the amount of $275 and the buyer's attorney's fees for $375. Put the buyers on line 8, scratch out that abstract, put the sellers on line 9. Or the sellers on line 8 and the buyers on line 9. Sellers on 8, the attorney's fees. Sellers on line 8, buyers on line 9.
Jim, will we ever have to use that abstracting before and after sale, the actual things written?
The what now?
So we've been crossing out what it says in that line.
Yeah, if we're not using that line, we can just scratch it out. The abstract, we're going to talk about abstracts when we get to talk about title insurance. We don't use abstracts anymore. They do on the western slope and some of the eastern slope, way out east in Colorado, but here in Denver, we just don't use abstracts. So we just scratch that out. That's good place to put something, where we don't have a line for it. And then here we go, guys. Then we have the seller has prepaid the water and sewer charges for December in the amount of $52. Prorate that $52.
Ask you something about a different question.
You can always ask.
For the 159640, I started the question late because I was trying to figure out where to put that. Is that line 17 in credit for salary?
Line 17 just shows last year's taxes.
Right.
That they were paid. So you don't do any adjusting at that at all. Just on the far left, you just note that they were what? POC.
So the bracket's empty and you just put POC on the far left?
Yeah, on the far left. You don't do any adjusting.
On that and start the next one.
Yeah, everybody cool on that? But there's a really good question.
That's why I started that last one late. I was
Yeah.
trying to figure out where.
Yeah, last year's taxes were paid, guys. Shoot, we're December 4th. Last year's taxes are history. They were paid long ago. On line 17, we note that. We don't make adjustments for it. We just put that they were paid on the far left.
Thank you.
You bet.
I remember from yesterday us talking now that you said it, but yeah.
Yeah. $46.80.
That's my guess.
46.97.
46.80, 46.97.
What are we doing now?
Who else?
45.29.
45, we are right on top of each other here. 45.29. 48.01, okay.
Oh, well, hell. I'm sorry, excuse me.
You're on YouTube forever.
Nobody knows who I am.
Who else? I should be getting bombarded up here, guys.
Yeah, the 46.97.
Couple of you got that, 46.97.
Well,
Should we do it? Let's do our platform. How many days go down here? We're on this side, of course. 31, 52, 4 from 31, plus 1, 28. 28 days. Is that right?
yeah.
Is it?
Firearms and day of sale and this.
Right. And so we're going to put that on line 32.
All the days that you're active.
And of course, that 46.97 is correct. So how many of you got that? Who's lying? Now, come on. Okay.
Are we,
And that goes on line 32, guys. Line 32.
so are we
46.90.
prorating the water and sewer?
We're prorating the water and sewer, yeah. Now, then it says we further agree to pay a 6.5% real estate commission.
11,537.50.
That's what I like. So get that quick and accurate. Line 37. That's it, you better believe it. 11,537.50. And that's again, debit seller, credit broker. Then we have the closing fee. We write that down on line 39. Just write it down. On line 39, $150. We're going to do what?
Debit seller and buyer.
Debit seller 75, debit buyer 75, credit broker 150.
You write it in.
Okay, guys, let's talk about something here. I'm going to talk about something that I get probably more comments on than anything that I talk about the entire course. I've had more people come up and thank me for this than anything else I do. And please, write this down. This is something that if we all would have known and practiced since we were 10 years old, all of our lives would be drastically better. And write this down, please. And hopefully you'll utilize it. Make it a part of your life. From the words of your mouth, from the words of your mouth, from the words of your mouth, come blessings or cursings. From the words of your mouth come blessings or cursings, life or death. Choose life. From the words of your mouth come blessings or cursings, life or death. Choose life. bless your life, bless your kids. My husband's just a bum. No, bless your husband, bless your kids, bless your marriage, bless this course, bless your occupation, bless your job when you get in real estate. Some of you are going to be making incredible money out there. And again, a lot of it has to do with our attitude, and this comes from the words of our mouth. They have power. Anyway, wanted to share that with you. Let's do this. Oh, we got 10 minutes.
Where's our fun facts? You want to give us fun facts? You can give us
The fun
any
facts?
essay.
Okay, how about this? What's the only food that doesn't spoil?
Honey.
Pretty good, pretty good.
What was it?
Honey.
Honey.
Oh, yeah.
Honey,
I
yeah.
know that one.
Yeah.
What is the only national monument that moves?
Tower of Pisa.
Niagara?
Tower Pizza.
Pizza. Not pizza.
Niagara Falls?
I'd say
That'd be good. That'd be good one.
It's a national-
The Eiffel Tower, no national monument, the United States, yeah.
Oh. God.
The only national monument that moves.
The
What
Sears
is it,
Tower.
flag
Three
considered a
rings of
monument?
marriage.
Eiffel Tower.
What now?
What's the 3 rings of marriage?
That's in the glossary. You'll get that later. We'll wait on that one. Okay.
What is the national monument?
The only monument that moves are the cable cars in San Francisco. Kind of cool, kind of cool.
Cable cars are a monument.
Let's do this, guys. Go to test number 2. And I believe we have a presenter today. Go ahead and take a little break. Have your lunch, do test number 2. And if you want to do it in a group, please do. Open book, closed book, any way you want to do it. And I'll see you guys about 1:15, thereabouts. Give you plenty of time to do this. Take a break now and have your lunch. Listen to the presenter. Hopefully we have one. And I'll see you about 1:15. Yeah. 1:15. Yeah, I'll give you almost 2 hours. Get the test done, have lunch, take your time. This is the toughest of all 3 tests.
That's 2.
so you want us to do that test over our lunch break?
Yes. Yeah, test, we're going to do that after we get back from lunch.
What is the presenter supposed to be here?
So are we not paying attention? Are we not paying attention?
Right now, we'll see, 11:30.
Jim, are we not having a break?
I don't know.
Because you cursed.
You have time to do the test.
You killed on motivation.
No, I wasn't that. Well, I mean, to the environment. Oh, yeah. And just recently, up until last
Where at?
Springs at the hospital.
Already.
The hospital? The director
Yeah.
of IT was a girl.
Okay.
She's like 5'2".
Until you get it 100%.
She was young.
So you know
Yeah.
the next one of those?
And she said F words all the time.
Every sentence.
I haven't asked her not to. I haven't asked her not to. No, she kept on.
Yeah, she just kept going. I bet. No,
And it's like,
especially.
other people thought, oh yeah, so then I worked with a bunch of young guys and they cursed a lot. And I say, hell and all that, but at work I never, until the last 3 years.
Yeah, it's just disrespectful at some points, but sometimes it kind of lightens up the air, you know. But then again, in excess, it's just kind of.
Yeah, well, it's not, I don't do that. Anyway, all right.
So we gotta take test 2. At least it's only 20 questions. Though.
You finished up in here? Thank you.
Exactly. When you're doing this, or you go to your.
Okay, let's see, guys. With test 1, it was
We go back to the So in Belgium, they sort of walk.
Hey, guys, don't go anywhere. This is Ken Clancy. This is one of the top lenders in Colorado. This is my go-to lender when I need a deal. So, stick around. She has a lot to put on the table for you. So, and she's got some.
And there's tons of food in there
tons to
too,
put in
so
the-
go grab
in
some
the conference
food.
room.
Let's go, maybe.
Let's get the real stuff started.
Thank you.
Which office are you from?
I actually have my own office in Erie.
Oh, Erie.
Yeah. Have you heard of Citywide?
Yeah, we went to talk to Gavin.
Yes. He's in charge of all of us in Colorado.
Oh,
Yes. He's awesome.
He's a Spitfire, isn't he?
Oh, he's awesome. he's actually the reason I went to Citywide. So I've been there almost 3 years. And him and I knew each other because we're both diamond partners with Innovative, which is now Berkshire. And so for like a year I was all, wow, I think this is pretty cool. And then he reached out and I was like,
Oh, he did? Wow,
Yeah.
that's wonderful.
yeah. So are you, do you, like,
Oh, we were,
buying?
I work with brokers and we were interviewing all these lenders and
Nice,
stuff.
nice.
So yeah, I met Gavin and another guy, new guy, Sam Shepherd.
Yeah,
He's
I
brand new.
adore him. He was a dialer for me, so.
Oh, really?
He was making phone calls for me for leads, and I was like, oh no, it's Sam McMullen.
Oh, wait, is it McCullough?
Well, McMullen, I don't know Sam Shepherd. But Sam McMullen, when did you meet with him?
Maybe that's, maybe.
Yeah, then it was Sam McMullen.
Okay.
And so he just started getting into business, but he's amazing.
Right. He was
I
like
love
almost
him.
brand new.
Yeah, I'm like, because he's so down south, and I was like, because I would have snagged him up and been like, hey, come work at my office, but he's so
Okay.
far down south. Yeah, I'm glad you met Gavin.
How's it going?
Good, how are you?
Good. I'm Austin, by the way.
Hi, Austin.
I got your hands full.
Nice to meet you.
Nice to meet you too.
Yeah, they're like kind of near the theory.
Is there anybody behind you guys?
No. They're
You should have asked Wayne what's up, because
I did. Actually, no, I didn't. He was in conversation with Jennifer. I was hoping he'd come in here to make conversation, but no, I guess he wasn't.
I can't remember. Did I exchange numbers with him?
I didn't. I think I remember seeing him exchange numbers with like 2 other people, and I feel like one of them was you.
I think I did because I was going to try to help him with when he got back.
Yeah.
Glad he hadn't come back, so now he can.
This is making this worse.
Almost got it.
Okay, let's go on this test number 2. I sense a lot of pain in the room.
I've literally gotten through 4 questions in like half an hour.
4 questions in half an hour, huh?
It's the worst I've ever done.
Well, let's improve on this.
I guess like he's going to be so
This is the toughest of all 3 tests. So, let's do it. Number 1, here we go. If a worksheet for, well, I need my glasses for that sucker. Settlement at closing contains a lender requirement for tax escrow reserves. It means that, talked about this last session, it's established to protect the lender's interest, not the borrower's. So be boy on that one. Be boy. Number 2, a lender is requiring 2 discount points on a $425,000 sales price with a 90% new loan to value. If the seller agrees to pay these points, the settlement sheet will reflect.
So for this question, Jim,
Okay now?
for this question, do you
Uh-huh.
kind of automatically know what the answer is?
How so? You think you automatically know?
Discount points are only being paid to the lender, not to anyone else in the.
Loan discount points are paid to the lender? Okay, yeah, so discount points are, so you think it's what, you
So
think
it's
it's?
gonna have to be C.
It has to be C, reported on closing statement as a credit to the buyer? No.
No, it
says credit to the
Credit
lender.
lender.
C.
C is debit to the
Debit
seller.
seller, credit lender.
But there's not a credit
Oh, wait,
lender column.
okay, here we go. That was a number 3, excuse me. Is that right? Where are we, guys?
Number two.
Oh, number 2. Oh, let me try that. Okay, here we go. Let's do it. We have 2 discount points. So we have $425,000. $425,000, and it's what, a 90% loan to value times 90% or minus 10%, whichever one. What's that come to? 382,500, is that right?
Yes.
That's the loan amount, and they say, and there's 2 discount points, so times 2%, and what's that come to?
7650.
7650. And the answer is, we're gonna what? 2 discount points, sales price, 90% loan to sale. If seller agrees to pay them, so the seller's gonna pay them. It's going to be debit seller, single entry. It's the only one that works. A. And you guys thought it was C, debit seller, credit lender?
Because sometimes you said that there is a lender column, you just only add it.
No.
You said we
No,
never see-
don't, you'll never see a lender's column. Okay, so, yeah.
We definitely did the question yesterday when we said like.
I know, there's a column for the lender, double column, but that's not, we're on a 6-column worksheet, okay? And in a little bit here, we're going to be looking at a 2-column worksheet. So, the answer is A. It looks like you guys are thinking these through pretty good. Let's keep going. Loan discount points are, I said this morning, discount points are considered prepaid interest, as they're paid before the loan is even made. A, so B boy on number 3.
You're thinking that they're paid before the loan is even made.
Yeah. Yes, they are. The lender has that money in hand before he makes the loan. He pulls it out of the loan before he even makes it. Then we have 4. Water bill payments are due in arrears for a payment of $58. This covers May and June. Closing is June 10th. How is this reflected in the closing statement?
What was the answer? 3.
Okay, let's figure this out. We got a water bill payment due in arrears, $58 on this side, and we're closing on June 10th. And it's for May and June. And so we build our platform. Our platform is going to be 61 days, 58, and then we have 31 days in May and 9 days in June. 40 times 58 divided by 61 is our formula, and the answer is B-boy. B-boy. What's that?
Or the answer for 1, 2, and 3.
1, 2, and 3. 1 is B-boy, 2 is A, 3 is B-boy, 4 is B-boy. Number 5. Unpaid escrow taxes for the preceding year at a January 10th new closing are?
Debit to seller, credit to buyer.
Remember, we talked about this in closing number 2. The taxes were not paid for last year. So who's holding those taxes? The lender is. We go to the lender and ask them how they want to disperse them. Remember closing number 2 that happened, and then we gave it to the buyer and let him make a couple of weeks interest on it. The bank was trying to be a nice guy. So the answer is D, dealt with in terms of the lender's instructions.
Oh, it's D.
D-dog on 5. Number 6. And this is one, guys, don't miss this one on the exam. I think this is the number they use. What is the documentary fee for the sale of a property with a purchase price of $192,000?
D.
Move that decimal over 4 places to the left, and B-boy, $19.20.
Pulling your leg. That's stupid.
What What would the non-resident seller tax be for the sale of a property with a purchase price of $92,000?
1840.
D-Dog. It's only for properties over 100,000. And yes, I told you that. So, it's only for homes over $100,000, guys, yeah.
Come on.
Hey,
Could've gotten sued right there.
you're not going to miss it on the state exam. Yeah, Chris?
So is the threshold literally 100,000 even? So if it's sold for 100,000 even, there is no tax?
Over 100,000. Has to be over
100
100,000.
to 1?
100,000 there wouldn't be.
1,001 cents there would
1 cent there would be. There you go. So, let's go to number 8. The fee for an appraisal paid for by the buyer 3 weeks before closing is C. Not entered on the worksheet, but marked POC, paid outside closing. You're going to have a couple of questions about that POC, paid outside closing. It's already been paid. Usually I have one on an appraisal, and you could have this one. You'll be ready. You'll be ready. How is the charge for an attorney to examine title documents on behalf of a buyer normally shown on the worksheet in an assumptive closing? C. Credit broker, debit buyer. Credit, notice how they turn them backwards on you just to get you? Okay, number 10. At an April 4th closing, assumption, how is the April rent of $1,800 collected in advance to the seller entered on the worksheet? Okay, so it's $1,800. We're closing on 4/4, right? 4/4, 4/1. 430. Remember, this is the one time where this becomes a debit to the seller, where on this side is the debit to the seller. We've got 30 days, 1,800. 4 from 30 is 26. Plus 1 is 27. 27 times 1,800 divided by 30, and the answer is C. Now, did anybody notice that you didn't have to do this one?
Yeah.
Did you? Good going, guys. Look for these. You'll see them on the exam, too. They're freebies. What's that now?
Because A and B. I got C.
Yeah, look, try to eliminate them, you bet. Just by what's not going to work, yeah.
It's fun with it.
Okay, number 11, calculate the interest on an assumed loan of $121,753.43, interest rate 6.7%, July 9th closing, first payment September 1st. Why is that September 1st important?
Is that the end date?
Yeah, that tells us whether this is being paid in arrears or advance, doesn't it? And it's paid in arrears because of the first payment isn't due till September. So, we have 100, and this is on the state exam, guys, this is all they're going to tell you. They're not going to say, take that loan amount, $121,753.43 times 6.75%. What's that come to?
8282.
How much?
8,218.
And 32 cents?
36.
36 cents. And this is the one time we divide by 12 to get the interest per month. This is the interest on the loan being assumed. This is the only interest that's paid on a loan assumption. What's that come to? Divided by 12.
684.86.
684.86. We're closing on 7/9. 7/1. 7/31.
Oh, this is such a bad.
We're only charging the seller for the days he's in the house. 31 days. 684.86 times 8. There's your formula, and the answer is A. The answer is A.
I could have sworn I did that. It's weird.
Now this one, guys, like I say, on the state exam, that's all they're going to tell you. And if you're sitting there, you're going, Oh, no, one of those stupid things. I was hoping I wouldn't get one. And you get it wrong, you're still going to pass the state exam. Okay, so don't go freaking out over it. You're still going to be fine. Number 12. Calculate the interest on a new second loan of $12,000 at an interest rate of 10% with a July 9th closing. What is this called? Is this what? What is this called? It's called prepaid interest. Prepaid interest for the month of closing. We have $12,000, 10%, $1,200 up here. We build our platform. Is that for a month or a year? That $1,200. It's for a year. It's for a year. So 365. Everybody following? 365, 1,200. And 9 from 31 is 22. Do we add a day? Yes, we do. There's our formula, and the answer is B-boy. B-boy. Who got that one? Bunch of you did. Good, good. You're gonna have one of those on the exam, so don't miss it. Number 13, at an August 30th closing, the current year's taxes of $956.30 would be entered on the worksheet as, let's see, August 30th closing, okay. Platform. You guys like that platform?
Yes.
It really makes sense, doesn't it? It breaks this big old huge thing down into one piddly number. And we count the days, which come up with 241 days. So the answer is D-Dog. D-Dog on that one. Okay. So who's doing real well so far? You guys. Now one hand, really? Okay, number 14. Number 14. Where is the new loan entered on the closing sheet in a new loan closing?
You said C.
13 is D-Dog. D-Dog.
Credit the buyer, single entry on line 3 representing D.
Payable to line. Very good. C is the answer to 14. C. Remember, this is the only time we need to know the line. There it is. Don't miss it with that one on the state exam, guys. Line 3, credit buyer. Piece of cake. 15. Net loan proceeds in a new loan closing are entered on a settlement sheet as a debit broker single entry. Time before last year when I took the state exam, they had this question, and debit the broker single entry was not there. What does that mean? It means it was probably one of the test questions that they throw in they may or may not use later. So if you see that, you're going, oh shoot, it's not there. I know that's the answer. It doesn't count for you or against you. It's just a test question. And there's going to be 10 of them, okay? And you don't know which ones they are. Neither do I. I can get a pretty good feel for which ones they are because they're usually pretty stupid or wrong. But that's okay if you feel like that, like, oh man, I don't even know what that word means. It's a test question. They just threw it in there. So, homeowners fees, number 416, of $40 are paid in advance by the seller on June 11th closing. HOA fees that have not been paid tells us it's a double whammy. There's only one answer with a double whammy. That's B-boy. Cake. Don't make it tough. Don't make it harder than it is. Take the gravy when they give it to you. 17, how will the loan origination fee be shown on the settlement sheet? A, debit buyer, no entry to seller. 18, how will property taxes paid in advance be shown on the settlement sheet? We've had I think we did one proration where taxes were in advance. So you might have had to draw the timeline to figure out what we're going to do with taxes paid in advance. And it's going to be credit seller, debit buyer. A. Number 19, in a closing involving a new loan, the net loan proceeds will be shown as, again, debit broker only. And then this last one is the toughest proration of all three quizzes. This is for a lease with closing May 10th. Oh no, it's taxes, isn't it?
Yeah.
Yeah, taxes, okay. So, they're paid in advance. Let's get our timeline, 365. Let's count our days. How many days in May? 31. 10 from 31 is 21. Do we add a day?
Yes.
It says through, so yes.
You see how through is hidden there? Taxes of $32.50 paid in advance are prorated through the day of closing, which means we don't add a day. We would only add a day if we were over here. So, 10 from 31 is 21. 21 days in May. How many days in June?
30.
30. July.
31.
August.
31.
September.
30.
October.
31.
November.
30.
December. And how many days? A lot, yes. 235 times 3250. Like I say, that's a tough proration. If you didn't struggle with that one, you are really on the right track. So 5 or less you passed.
Sweet. I got about 5 right.
Got 5 right. Guys, miss them here. I make these so that you do terrible. I want you to do terrible on these. I'm not being mean. It's just that if you miss them here, you won't miss them on the state exam. This doesn't count. This is just practice.
5 exactly.
What's that now?
Missed 5 exactly.
Did you? Good.
So, does it mean if you miss 5, you pass?
Yeah, 5 or less you pass.
That's good. Did you? I was like, you had to get above 5 to pass. I was like, that would suck.
Okay, gang, let's get into your real estate manual.
Oh no, I just kind of zoned out there. I didn't know.
Let's go to chapter 19. 19 in your real estate manual. What can I answer for you? What kind of questions you have? Can you what now? Read the book.
What page did you say?
19, chapter 19. It's right after 18.
Ecclesiastes 4:20.
That makes sense.
Jim, you probably
I don't have mine, you'll have
you get
yours.
scratch paper at the exam. Can you take in some paper?
They give you one piece of scratch paper. And if you get that filled up, you have to turn it in and get another piece. They let you take nothing out of there. Okay, nothing in and nothing out.
So they give it to you and you can't. Okay.
They even give you the pencil you can use. So, yeah, they won't let you use your own pencil.
Have the answers engraved on the wood in your desk.
Oh, yeah, probably. And I tell you, I went to Pearson. I took some classes. I went to some tests over at Pearson. This is PSI. Pearson, they make the women pull back their hair to see if anything's in there. They make you pull out all your pockets.
They make you lift up your pant leg.
Oh, yeah.
Wow.
So you can't have a wallet or phone on this?
No,
That's like,
absolutely not. But you can have nothing. What's that now?
Do they give you a copy?
They give you a calculator. You can't take one in.
You can't take your phone.
And they do give you
No
scrap-
phone.
scrap paper.
That one piece of scratch paper, yeah. And you won't use it. You won't even use the whole scratch paper.
math problems, right?
Only 4 math questions. You're in. I had, what I tell you, I had 9 prorations Friday when I took the test. I didn't use up a whole piece of scratch paper. I think I didn't use it gold the whole one side. So you don't need a bunch of paper in there. So. Top of page 19-1. Let's read this. Introduction. I really like these 2 paragraphs. This book does a real good job on closings. A real estate closing or settlement is the formal procedure by which title passes from seller to buyer and a final accounting is given for all funds received or paid. Closing procedures vary from state to state and even within state borders. In Colorado, title companies normally conduct closings. Real estate brokers, the attorneys, or independent closing agents may also conduct closings. Only a closing agent will do your closings for you. You're not going to have attorneys or anybody else. Like I say, there's some brokers who do their own closings. I have no idea why, but they do. The closing is created through the contract to buy and sell, with the majority of the closing terms determined from the negotiations of the buyer and seller. The contract, along with title documents, a tax certificate, and lender loan documents, make up the pieces the closer will use to create the closing statement for each party. This chapter will cover the rules and requirements for closings and then work through 3 different closing examples. We're not going to do these closings in class. If you want to do them yourself, grab some of these blank ones and do it. I suggest you don't. This is why. Well, I'll tell you a little bit, another part here. I'll tell you, but don't. What you're going to look like on the state exam are those 3 20-question quizzes. Get those down. Don't study the closings even. The closings are practice for those 3 20-question quizzes. Those 60 questions are imperative. You have all 60 of those down, you're going to be fine for anything they hit you with in the state exam. Let's go to page 19-2. Second to last paragraph, preparation of legal documents. Although buyers and sellers may be charged a fee for closing, no fee may be charged for preparation of legal documents except by an attorney representing the buyer or seller. The Conway-Bogue decision granted real estate brokers the right to prepare certain legal documents, but prohibits licensees from charging a separate fee for such service. We have a right to fill out contracts, but if I have a real tough contract and I have an attorney help me and he sends me a bill, I have to eat it. I can't pass it along to my clients. And there's no requirement that we have to fill out contracts, guys. We do, who else is going to? But there's no requirement that says we have to. And the companion title guarantee case specifically prohibits title companies from preparing such documents. Title companies do not prepare documents. They have to be licensed to prepare documents. We give them our stuff, and they just, with instructions, and they put it together, is what they do. But that's what we say, that they prepare documents. Friday, a question on the state exam said, when title companies prepare documents. That was a question. That's totally wrong. Title companies don't prepare documents. How do they work? They work like this. Today, title companies only fill in blanks in legal documents under explicit instruction from the broker responsible for the closing. The listing broker, who is responsible for completing the deed, bill of sale, and any notes and deeds of trust called for in the contract, uses the second section of the closing instruction form to hire the title company as scrivener. Highlight that word, scrivener.
that even a real word?
Oh, that's a real word. What happened in Europe, guys, back in the Dark Ages, there was usually one person who knew how to read. And they were the town scribe. And what they would do, can you grab those balloons and move them? They're right in front of the camera. That's great. What are the odds, really? Anyway, that's from our birthdays a month ago, so. Thank you. A scribe, and this scribe was the one who filled out all the contracts. Like I say, they were the only ones who really know how to read, and so they were called scriveners. In fact, today in Europe, a notary public is held far higher regard than an attorney. They're called the scriveners, the town scribes. And that's how title companies act. They act as the scrivener. Why do I keep bringing this up? You will have a question on it. Don't miss it. They act as a scrivener to complete the legal forms. The listing broker will be responsible for paying for all legal documents and for their accuracy. Good funds. Good funds. In Colorado, on the settlement date, all parties, including the broker, buyer, lender, or sometimes the seller, must furnish good funds for amounts due. No disbursements may be made until all funds are available for immediate withdrawal as good funds in accordance with the statute. Disbursements from closing may be made only after the closing entity has received good funds. Good funds are considered to be electronically transferred funds, certified cashiers or teller checks, and other funds that are either received in sufficient time prior to closing to be eligible for immediate withdrawal or are guaranteed by the depository in which they are drawn. This next sentence is the only place in this entire book it says this. Cash is not considered to be good funds. I can show you a dozen places in this book where it says cash is good funds. That's why you don't want to ever read ahead in this book. There's a lot of mistakes. Plus, they love repeating themselves. When we're going through this book, I'm going to say put a star there, put a check mark there. That's the only part of this book you want to be reading, because there are just a ton of mistakes, and they love repeating themselves. On the state exam, I did not have a question where there was any doubt in my mind whether cash was good funds or not. You can have one. I don't know what to tell you. I would say if they put down that cash is good funds, I would say yes, they are. Because I'm sure the state has not updated that test yet. Our committee sure hasn't. And cash was always considered good funds until about 3 years ago. Now it's not. We can't bring a suitcase full of $100 bills to a closing. And yet we have to accept legal tender. So I don't know what to tell you. But cash is not considered good funds.
Why?
Because it tends to disappear. So on the exam, it's probably going to be. Yeah, kind of crazy. Okay, 19.3. Look at the second paragraph. The brokers attending the closing must sign and secure the signed approval and acceptance of the buyer and the seller on a copy of their respective closing statements for their own protection. Whenever I read that, I get upset. We don't sign our closing statements for our protection. We do it for the lender's protection. I got a call from this broker one time, and he called me up. Well, it was an ex-student. And he said, man, I got a real problem. He said, I'm sitting in closing right now, and I'm not comfortable with all these figures that they have on here. And I don't want to sign the closing statement. I said, well, what's the buyer say? And he said, the buyer has all of his stuff in a pickup out back. And after this closes, he's moving in the house. He's got to get this closed. I said, how about the seller? He said, the seller has a double closing. He's closing on this one now and another one in an hour. He's got to close. I said, how about you? He said, my Mercedes payment is due tomorrow. I've got to close due. And I said, well, tell them you're not going to sign the closing statement. And I don't know how hard you want to dig in your heels, but don't be surprised if they say, oh, okay, and just keep going. Because it's not for our protection, it's for the lender's protection. And the lender can override that. I said, give me a call later on and let me know what happened. He called me a couple hours later just laughing. He said, they put those closing statements in front of us, and that's all we as brokers sign at the closing of the closing statement. And he said, I'm not comfortable signing these. They just took it through in the file, kept on going, never said a word. So, but now sign your closing statements. Don't think, oh yeah, I remember Jim in class saying we don't have to sign them. You do have to sign them. Yeah,
Did
Chris.
he get paid even though he didn't sign?
Yes, he got paid.
So
Yes, he did.
Mercedes payment
Mercedes got paid. Yep, everything is cool.
Life's good.
What's that now?
What's the repercussion of not signing?
What's the repercussion? Probably nothing. It's the lender's responsibility. It's the lender's call. It's not, it says that we sign them for our own protection, which isn't true. So we can say we're not signing them. You're going to sign them. I've never had a closing where I haven't signed them. And you will too. Why put up with any grief? Just sign them and go on. But if there's a bunch of stuff in there that you're not comfortable with, be a professional. Let's go to F, broker closing records. The employing or independent broker must retain copies of the pertinent documents listed under transaction files and retention of records, escrow records for 4 years. Guaranteed question. How many times do I say that in any given day? Guaranteed question. How long do we have to keep our records? 4 years. And he used to say there's no retention records for associate brokers. Not true anymore. You guys as associate brokers have to keep your records now too.
How are those kept? Are those, do they have to be electronic and?
Both, combination of the two, yeah. Knowing you, Austin, you're going to have hard copy, soft copy, electronic copy, and that's great. You betcha. You betcha.
Laminated copy.
Laminated, non-laminated, laminated. Yep.
Second file cabinets.
You bet.
Bamboo paper copies.
And that's great. That's great. Let's keep going. Escrow tax reserve account refunds. The tax reserve has no relationship to the proration of the current year's taxes. This is the reserve that the lender's making the borrower put in an escrow account. Okay, it has no relationship to the proration. We don't prorate those, we just return them to where they go to. The reserve is the amount the lender is collecting from the buyer to pay the property taxes in the future when the bill comes due. Now, I mentioned that taxes, they will never have more than 3 months worth of taxes at a closing, and this is why. This would be a cool thing to know, guys. I can't imagine on the state exam anything like this, but this is a cool thing for you to know. This reserve is based on the lender's loan requirements and state law. There's the statute. This law provides that any amount held on May 20th in excess of 3 months, 3/12 of the taxes paid that year must be refunded to the borrower on or before May 30th. So every year, any amount over 3 months has to be returned to the borrower before May 30th. So that's why they'll only keep 3 months worth, and you're going to have that on the state exam. You're going to have it on the test 3 also. On test 3 also. That's why the closing is May 1st. What's the maximum a lender's going to keep? Who cares if it's May 1st or whenever it is, or April 1st or December 1st? They're only going to keep 3 months. And because of that, there's no requirement for 3 months for insurance, 3 months for MIP, PMI, HOA. Everybody know what those initials stand for, I hope. And there's no reserve requirements for them, but they just keep 3 months also, just to keep everything equal. So that 3 months, because on May 20th, any amount over 3 months has to be returned by May 30th. Would this be a great thing for you to know at a closing sometime when somebody asked about this and you knew the answer? Show off a little bit, guys. You're going to be the smartest brokers out there. Let's keep going. Back in 1995, the Congress and the Senate both got rid of long-term capital gains tax, and our economy would have gone through the roof. but Clinton vetoed it. And he came up with a halfway measure where we're able to write off the taxes and the interest on our primary residence. When we sell our property, we can keep all of the profit up to $250,000 if we're single, $500,000 if we're married. And this is for people who have lived in that home as their primary residence 2 of the last 5 years. So let's read this. Generally, a transaction that consists in whole or in part of a sale or exchange for money, indebtedness, property or services, or any present or future ownership interest must be reported to the IRS on Form 1099-S. This includes many real estate transactions. However, there are several general exemptions from required 1099-S reporting. One of the most common is the sale or exchange of a principal residence, including stock ownership in a co-op housing corporation. Remember, that's where we have a apartment building, or I should say a condominium building, and it's owned by a corporation. You buy stock in that corporation equal to your unit. Again, including stock ownership in a cooperative housing corporation for $250,000 or less, $500,000 or less for married persons. And the person responsible for closing the transaction receives an acceptable written assurance certification in the form prescribed by the statute. Further information, instructions, and forms should be obtained from professional legal counsel. IRS materials may be obtained from www.irs.gov. Pretty good couple of paragraphs there to explain to your people about how they can use their taxes. Before 1995, if you sold a property and made a profit, you had to buy a more expensive property, then it wasn't taxable. A lot of people think it's still that way. It's not. It's not. You can keep up to $250,000 if you're single, $500,000 if you're married. And you can do it every 2 years. Every 2 years.
And you can downsize.
And now you can downsize. Yeah, we're going to talk about that in appraising. We'll talk about how the market buys the most expensive home they possibly can until you're an empty nester and you buy down in that comfort level.
So what if you pay off a house, buy another house, and rent out the old house? And then, say, 5 years down the road, you decide to sell it. What happens then?
You live in it for 2 years, rent it for 2 years, or even 3 years, and then sell it. You lived in it 2 of the last 5 years. You've got to rent it for 3 years. You can keep all of the profit on it. If it was your principal residence, at least 2 of the last 5 years. You can only do it once every 2 years, though. So the house you're in right now, you'd have to wait 2 years to do the same thing. Yeah, Austin?
Let's say I have a single family home, I own it, I've lived in it for 2 years, and then the zoning laws allow it, and I make it a duplex. Then I rent both sides out and take all that profit?
It's actually 1 to 4 unit properties. Now, whenever we start talking about taxes, guys, I always say the way I understand it, because tax laws are so complicated. So, Austin, the way I understand it, I think you'd be fine. So,
Talk to an attorney.
talk to an attorney or a CPA, preferably a CPA, certified public accountant. Because the rarest person on earth is a competent attorney. Remember that. Look at the last paragraph on page 19.3. In general, each person engaged in a trade or business who, in the course of that trade or business, receives more than $10,000 in cash in one transaction or 2 or more related transactions within 12 months must file Form 8300 and give a copy to each party named in the form. Voluntary filings may be made for suspicious transactions of similar or lesser amounts. The report must be retained for 5 years after the date filed, and fines and penalties apply for failing to file required information. Again, if you have cash and you put more than $10,000 in cash into an account, that's an automatic audit from the IRS, the way I understand it. So you want to make sure you handle this. What if you make, in every deal you do anymore, you're going to make more than $10,000. So you got to decide to talk to somebody and see how you're going to handle that. You don't want big red flags coming at you because you're making so much money. And make sure you're handling it correctly. FIRPTA. These are people from other countries and how they can buy property here. Yeah, Chris?
Can you just spend another 30 seconds on what we're just talking about?
How so?
So you said you're making a lot of money. Be cautious with it.
Yeah, if you got $10,000 in cash, be real careful putting it in one lump sum into an account. These are all banks are regulated by, of course, the Federal Reserve. Federal Reserve is not a government agency. It's a private organization. And what they have certain standards. That $10,000, talk to a CPA and see what the real things are, what the real issues are when it comes to putting deposits into your account at any federal institution. So, anyway, I'm telling you more than I know, okay? Get a good CPA and find out what the real story is when it comes to putting a whole lot of money into banks. And here we go, non-resident Colorado withholding. Here's the ripoff fee, guys. Colorado law calls for a possible withholding of potential income tax from the gain on the sale of a property sold by non-Colorado residents. The seller is subject to withholding tax if the seller lives or will live outside of Colorado and the sales price is greater than $100,000. So again, if I'm closing on this deal today and after I close I'm moving out of state, they're supposed to hit me with that ripoff fee too. There are several exemptions from this requirement, the primary being the sale of a principal residence that has no withholding. The amount of tax to be withheld is the lower of 2% of the sales price or the seller's entire net proceeds. Not net loan proceeds, net, help me out, sales proceeds. What the guy's walking away with. The balance to the seller. It is the responsibility of the closing entity to collect and send this tax to the Colorado Department of Revenue. Big star by that, guaranteed question on the state exam. Who is responsible for collecting that 2% ripoff fee? The closing agent. Okay, the closing entity. And RESPA, what does that stand for? Real Estate Settlement Procedures Act. RESPA was set up to regulate closings, real estate settlements, that's closings, Real Estate Settlement Procedures Act, and to also regulate referral fees. Let's read here. Federal law places certain requirements on lenders concerning to the closing of real, like I said, a lot of mistakes in this book, of real estate transactions and related matters. The Real Estate Settlement Procedures Act is administered by the Department of Housing and Urban Development. That's on the state exam, guys. It's regulated by HUD, and that's wrong. 2 years ago, they went underneath the SEC, but the question on the state exam, the right answer is HUD. They don't even have SEC as one of the answers.
It's really 2 years ago with this.
Yeah, it changed to the SEC, Securities and Exchange Commission.
But an exam,
It's still HUD.
You should highlight that.
Yeah. Almost all lenders, aren't you glad you take the test every year? Picking up this stuff like this.
I just wish they would listen to you more.
Well, I tell you, they do in our committee, of course, on the Colorado portion, but on the general portion, we don't have a lot to say about any of that stuff, really. So it makes it tough, really makes it tough. Anyway, and the Real Estate Procedures Act, RESPA, is administered by the Department of Housing and Urban Development. Almost all lenders that make first lien loans on 1 to 4 family units, including condos, co-ops, and mobile homes, are subject to RESPA. Construction loans are not covered. Owner will carry loans are not covered. It's only residential loans that are being sold to the secondary market. So, loans by credit unions. Credit unions are correspondent lenders. We're going to talk about that. Or they keep them in their portfolio. They keep loans in-house. When we get to financing, we'll talk about that in much greater detail. They're portfolio lenders. Top of the next page. RESPA requires lenders to provide the applicant at the time of the loan application or within 3 days following a booklet explaining the costs involving and give a good faith estimate, a GFE, showing the loan terms and the settlement charges incurred if they go forward with the loan process and are approved for the loan. 3 days after closing, they get this form called a good faith estimate. They also get a TILA report, Truth in Lending report. But now they've combined those reports into one report called a TRID, T-R-I-D. Write that down up in there somewhere, guys, TRID. And yeah, you're going to have a question or two on the state exam about this TRID. And you don't need to know what it is. Just remember it's a TRID. It's a combination of the good faith estimate and a combination of that and the TILA, Truth in Lending report. In financing, we go over both of those in really strong detail, especially Truth in Lending. Continuing. It's showing the loan terms and the settlement charges incurred if they go forward with the loan process and are approved for the loan. It explains which charges can change before settlement and which charges must remain the same. It also contains a shopping chart, allowing the borrower to easily compare multiple mortgage loans and settlement costs, making it easier to shop for the best loan. The booklet must also disclose the lender's business relationship with any company that the borrower is required to use in legal services, title insurance, or searches. Skip that next paragraph. In the usual Colorado transaction, the seller contracts to pay for the title insurance policy and may therefore select the title policy without fear of a penalty. Not anymore. Now the buyer can choose it and the seller would still have to pay for it. This is way outdated. The purchase of a mortgagee. Who the heck's a mortgagee?
The lender.
The lender's title policy does not involve the seller, but rather the lender imposes this requirement on the borrower. A buyer normally purchases a mortgagee's title policy from the same title company because it's just a spin-off policy. But it still doesn't say why. So few people know why a mortgagee needs a title policy. You do, because they're selling it to the secondary market, Fannie, Freddie, Ginnie, or Farmer Mac. Next paragraph. The lender or lender's agent must also prepare a uniform settlement sheet prescribed by HUD, a HUD 1. A HUD Form 1 is called a HUD 1, and may not charge for its preparation. The HUD 1 must be mailed or delivered to the borrower and the seller on the date of settlement or soon thereafter as is practicable. And again, and the lender must retain the record copy for 2 years. Guess what? 4 years. That's a mistake. 4 years on the side over there. The last paragraph here. Now this tells it all. Why do we have this closing class that you guys have to take? This is why. The federal government has not preempted the states in the area of closing real estate transactions. Colorado law and commission rules prevail for Colorado closings. The commission has found that the lender's duties under RESPA regarding closings are not the equivalent of requirements placed on Colorado licensees. The commission has presently taken the position that buyers and sellers are better protected under law and rule administered by the commission concerning closing statements. Therefore, it may not be assumed that lender compliance with RESPA fulfills the broker's obligations concerning Colorado law. What Colorado requires is above the RESPA requirements. And that's why we need this closing statement. This closing class, I should say. And special taxes. Special assessments such as street paving. We talked about this early this morning. We were talking about this. Street paving, storm sewer improvements, if they were installed at the time of sale or even not yet assessed, are generally paid by the seller under the terms of the approved contract form and are never prorated. You never prorate special assessments. You do prorate those yearly taxes. What are those yearly taxes called? What's that term? What's that Latin term?
Ad valorem.
Ad valorem, according to value. Ad valorem taxes, based on our value. There's some good information here, guys. Talks about, paying on prorations, how we do them on page 6 and 7, if you want to spend some time looking at that. And then we have the closing examples. Again, if you want to play with those, knock yourself out. Let's go over to page 19-22. When you sit down at the closing table, guys, this is what you see. This is the seller's closing sheet. We don't see this big 6-page monster. We see something like this. And all it shows is what the seller is receiving and what he's paying out. It's just like this, for the most part. For the most part, it's just like this. How long is it going to take you to look down there and make sure everything's right? How many seconds? It's not that tough. You're going to be in great shape. You'll know how to read these. And look at page 23. The buyer statement is going to be a lot bigger than the sellers, of course, because they've got all the expenses pretty much, don't they? And again, making sure all the debits are in the right place, all the credits are in the right place. The beauty about this closing course that we're taking right now, it's just overkill. It's more than what you need to know. So when you walk into a closing, you know what to expect. And you're not going to walk in there saying, boy, we have no idea what this is all about. Yes, you do. Yeah, Chris.
Hey, are those fees on the right, are those actually good prices? Like $1,500 for title insurance premium, $2,000 for loan origination fee? Are those actually good quotes?
Remember, how much is loan origination fee? Typically, you can't even say typically. How much can you expect the loan origination fee to be? About 1%. About 1%.
So that's just conventional?
No.
That's FHA too.
On FHA too. Oh, yeah. And VA. Yeah. And that's not saying, oh, yeah, the typical is 1%. That's price fixing. You can't say that. What's the normal? There is no normal. It's negotiable. It's all negotiable.
So knowing that's 1%, that's actually a good price, because it's less than 1%.
Yeah, if it's less than 1% or they don't have a loan origination fee. I know some banks who do loans without, remember we talked about NACA, who doesn't have any closing fees or down payments. So,
The lady talked
again,
about NACA today.
did she? Really? Huh.
Did she?
No, I don't know why she would. She's in competition with
You
them.
talked about it earlier this morning.
This morning, yeah.
Okay.
Were you confused? You
I am.
You kind of
See?
confused me with her? Really?
Well, I didn't have my glasses.
You need some glasses. I'm going to say, give me some glasses anyway. Okay, and that is the end of closings. Lesson 4. That's for the tape, guys.